Hello everyone, Raymond Opoku here once again with a brand new Forex market trading lesson. Today's lesson is on how to analyze currency pairs the right way. Currency pair analysis or analysis in the Forex market seems to be one of the most difficult things, especially for newbie traders. So for today's lesson, I'm going to walk you through how to do it simply. The first thing you need to consider when analyzing a currency pair is the time frame. So the time frame is a very important thing to look at. It determines the kind of trader you are, or the kind of trader you are will determine the time frame that you will be trading from. Whether you are a short-term trader, a medium-term trader, or a long-term trader. Short-term traders trade from the 1 hour charts and below. Medium-term traders trade from the 4 hours, and the long-term traders trade from the daily time frames, the weekly time frames, and the monthly time frames. Also, one thing that is very important to consider on time frame trading is the multi-time frame analysis. Consider multi-time frame analysis until you are very comfortable in trading from just a single time frame, just like I'm comfortable from trading in just the 4 hour time frame. So this is a daily chart of the Euro GBP, and from the daily chart we can see that the Euro GBP is in a smooth downtrend just at this area. But when you go a step above the daily chart and pull up the weekly chart, we can see that Euro GBP is in a long-term uptrend as the weekly time frame is telling us. So the long-term traders will be focusing on buys. So we have a first trend line here, a second touch of the trend line, and then the weekly time frame traders would lay in patience and wait at this zone to wait for the breakout of this trend line or the respecting of this trend line. So this is like a view from the long-term time frame traders. So the Euro GBP has currently respected the trend line. So it's a buy over here. But from the daily time frame, we could see that the Euro GBP was selling from months ago into this buy zone. That is how to conduct multi-time frame analysis, and this is a very simplified view. We're conducting multi-time frame analysis. Short-term traders can combine the 1 hour time frame, the 15 minutes time frame, and the 30 minutes time frame, whereas medium-term traders can combine the daily time frame, the 4 hour time frame, and the 1 hour time frame. With the long-term traders, they conduct multi-time frame analysis from the monthly, the weekly, and the daily time frame. The view of the chart or the size of the chart is also one important aspect when analyzing from the price action perspective. As price action traders, we need a wider screen, no way for smaller screens to analyze price action successfully, since we will be looking at the history of the currency pair that we are analyzing. So this is a chart of the GBP USD, and we can see months and months of price action before us, where we can go back into time and plot this trend line. But for the sake of context, I'm going to pull up the same GBP USD chart from a phone and let you see the difference on how analyzing on a phone is different from analyzing on a PC, which has a wider screen. Here goes the same GBP USD chart that we had on the PC on the phone. As you can see, we need to rotate our phone to get a wider screen in comparison to the one we have on our PC. And even after doing that, we don't have enough price action to look at for analysis. So we need to do a lot of zooming in and a lot of zooming out. After doing that to get what we have on the PC, or to get something like what we had on the PC, we can see that the view of the chart is so small and the candlesticks are not clear enough to do the analysis. So this is just a clear reason why I prefer analyzing on a PC than analyzing on the phone. The PC just gives you enough widescreen to see the price action in anticipation of profitable trades. But then the phone screen is narrow and you need to do a lot of zooming in and zooming out, which makes the candlesticks very unclear. So if I were you, I'll stick to analyzing on the PC. That is the way to go. The next most important thing when considering the analysis of any currency pair is the zooming in and the zooming out of the currency pairs chart. Sometimes you need to do a lot of it, or even most of the time, you need to zoom in and zoom out to see the price action clearly. For instance, this is the AD/USD forward chart. I've zoomed in so much, I'm only seeing the short-term price action, but then there's a medium-term or a long-term price action pattern that I'm missing over here just because I've zoomed in so much. So what do I do next? I only need to zoom out. So after zooming out, the price action is a bit clear since I have weeks and weeks of price action to deal with. Next thing I do is I pull my trend line and connect these two highs. After connecting these two highs, I have some sort of a downtrend line, but then I figure out I can also connect the lows. So after connecting the lows also, now I notice that I have a wedge-like structure, and this was done by just zooming out of the chart to see the medium-term price action. This is why zooming in and zooming out is important in analyzing a currency pair as well. So the next time a chart is not very clear to you, do a lot of zooming in and zooming out so you figure out everything on the chart clearly and you will not be blind to any price action pattern. The next critical thing to consider when analyzing a currency pair is the current level of price. That is where price is at currently. What do I mean by this? That is price at the support level or is price at the resistance level? That will show you the next line of action to take. So with this USD card forward chart that we have on our screen, I'm going to plot a near-term support and resistance level on it so that we can figure out what to do next on the USD card. So we have the near-term resistance which comes in at the 1.26473, and then we have a near-term support which comes in at the 1.25017. What do we do next? We can see that USD card is just locked in the middle of the support and the resistance, so we do nothing here, but then we wait for price to either hit the resistance or for price to hit the support to figure out the next line of action. So what happens at the resistance level? When price hits the resistance, it will either respect the resistance or it will either break through it, or if the USD card is fortunate enough to drop to the support level, we would also wait for the USD card to hit support and reverse or break support. So that is how you figure out how to trade the currency pair. Is it at support or is it at resistance? And what do you do next? You decide. Another very critical thing to look at or to consider when you're analyzing a currency pair is to determine the type of market that you are trading or the history of the currency pair you are trading. The type of market in the sense that is the market ranging or is the market trending? The history of the currency pair. Has the market ranged before or has the market trended before? If the market has ranged before, then there is a high probability that it's about to trend. And if the market has trended before, then there's a high probability that it's about to do what? To range. So considering this NZD CHF chart, we have areas of ranges and areas of trending. This is what I mean by that. So all the rectangled areas are areas that ranged, and all the areas that are clean were areas that trended. After this very range, the market trended. Also after this range, the market trended. Same thing after this range, the market also trended up over here. That is what I mean by determining the type of market that you are trading and the history of the market. The last thing to consider when analyzing a currency pair is the fundamental analysis. But then I have a whole video on fundamental analysis and I'll link it at the end of this video. I hope that you enjoyed this very trading lesson. I'll hit you up with another very educative and much more informative trading lesson in a next video. Bulls make money, bears make money, and pigs get slaughtered.